Hello, it's Thursday the 12th. I'm FxPlew and this is the market brief. So Reeves got a bit of a wake-up call from the OECD. They put the UK as the only G7 nation with inflation above 3% and they warned it's set to get worse. Before the war, an end was in sight and 2% looked within reach by April, but now we're seeing forecasts for around 5% by year end, and British consumers look likely to be squeezed harder than those in other G7 nations. Mortgage deals have been yanked faster than we've seen since the 2022 mini budget mess as lenders adjust with market projections that the next rate cut will be significantly delayed, and this has seen the average rates on 2 and 5 year fixed deals move over 5% again. The Climate Change Committee has been on. The CCC report found that if fuel prices spike similarly to 2022, the higher cost will be similar to the net zero additional costs that have had so much bad press from the right-wing opposition. Now, of course, they are banging the drum for renewables, but there is a point in principle at least. If we had got our act together on renewables, then self-sufficiency, or closer to that endpoint, would certainly protect the UK economy from energy inflation, which always hits harder when we're still a net importer of oil and gas. Now, Iran has warned that they are prepared for a prolonged war that could destroy the world economy. That is, as they tighten their grip on fuel shipping. They fired on 2 commercial ships in the Straits of Hormuz. The IEA released a record 400 million barrels from reserves to help control prices, but reopening the straits is a key in order to stabilise supply going forwards. Trump's boast about sinking all their ships has rather ignored their smaller boat capabilities, and the capacity to wreak havoc continues, so his assurance that tanker safety will come very quickly may very well be exposed as more Trumpian garbage in the short term. And where Iran plans to ramp up focus on commercial centres like Dubai that are seen to be aligned with the US, that play is aimed at ramping up international pressure on Trump beyond the energy costs and higher inflation. Meanwhile, in the market, the dollar index peaked around 99.30 and there is apparent resistance around the 100 level, but sterling kicked off this morning lower against the dollar around 133.85, fairly flat against the euro around 115.90, and euro dollar is down around 115.50 on the open today. That's it from me. Have a great day.